It's Brian Preston, the Money Guy.
This next question is from Zachary. Sorry, and this is this is involved. It's specifics, but I'm gonna ask a bigger question here. He said, I can pick a no deductible insurance plan for $74 a month, or a high deductible plan for $81 a month for the $1,400 deductible. The high deductible plan gives me access to an HSA. Should I pick the high deductible plan because of the HSA? I'm 28, no kids, and healthy. So one of the things that's really interesting is it sounds like his high deductible plan is actually more expensive than the other, which I think is different than what we normally see. But let's forget about the specifics for a second. I think here's the question that Zachary's really asking. If open enrollment comes up and I have options for a couple different health insurance plans, how do I figure out which one makes the most sense for me? Is there like a way to think through that to determine which way I should go?
Zachary's situation, because we've seen this before, these crack me up because it's almost an arbitrage situation where I almost can see how this played out in HR. Is that you have probably a very traditional company, a very successful company that has a Cadillac insurance policy, meaning that they have loaded this thing up. It's highly, highly subsidized by your employer. And that's why your premium is 70-something bucks a month. By the way, your insurance cost is way beyond that. It's just your employer is picking up the lion's share of it. But then I envision there's some financial mutants out there at the workforce that have watched enough Money Guy shows that they go, you know what, these HSAs, they made it on the financial order of operations. I know that if I use it appropriately, this is another way to get that triple tax advantage, to get the tax-free growth. My employer needs to offer this. So you go to your awesome employer and they go, well, we have this Cadillac plan, but if they want it, we'll put it together. So they put together an option within their cafeteria plan that allows a high deductible health insurance. Because realize you can't do a health savings account unless you have a high deductible insurance plan. So your Cadillac insurance policy that covers everything, has zero deductible, doesn't qualify for you to make those contributions. And then I'm always amazed when these successful companies put these out when the premium is actually higher to the participant than the Cadillac, because it's almost like a Roadrunner Wile E. Coyote moment where they're putting pine straw on it going, sure, here it is, you asked for it. And they're actually probably hoping that you do take it because it's going to save them a fortune on the highly subsidized insurance. But I do think it's going to require a lot more on you when these opportunities are put, because there's a good chance, I get it, you're healthy, you don't use health insurance, you're like, it's great that they're subsidizing, but I'm getting zero economic benefit out of this because I'm in my 20s. I don't use my health insurance. I don't get sick. But I don't know that I can encourage somebody to go immediately jump into the HSA, the high deductible plan, when if you did have an ask, if you needed to actually got in a car accident or something or you got struck with an illness that put you in the hospital or something, you might... there's a balance there that you've really created some weird distortions by the way your employer set up. Because the way it's traditionally supposed to happen, and this is the common sense way, when you have two options, the Cadillac versus high deductible. High deductible better be a heck of a lot cheaper because you're carrying a lot more of the risk of the policy since you have to put your own money into your health care treatments before the insurance actually kicks in. You're really basically buying access to their discount network. You should be getting cost savings on that. So to hear that the Cadillac coverage is actually cheaper turns the whole concept upside down. And I think that's something to be aware of. I felt like I went a long way on that. Did I cover everything?
I think that was great. For me, when it comes to, I think I allow, whenever things are uncertain, I try to make mathematics inform the decision. And so it's pretty easy. I set up sort of a T column, two sides, and I figure out, okay, what's my premium difference? How do we go to the doctor? And so I got little kids now, and we always go to the doctor for something. But when I was single, we never went to the doctor. So I might get sick and go to for a sick visit once a year or something like that. But now that I have kids, it's different. But you estimate kind of your costs. And you say, okay, if I'm doing the copay thing on here, how much will as many visits I have in copays cost? And then over here, if I'm having to hit the deductible, how much each of those office visits cost. Is it a $20 copay versus a $200 office visit? And I kind of total up what I estimate it'll be. Well, then the very last part of the calculus I do is, okay, what's the deduction I'm going to get if I max out the HSA? And so really I add up A, premium difference, plus B, difference in costs based on my usage, plus C, tax deduction from HSA, and one of them will be better than the other. And generally speaking, when I look at those two options, I go with the one that's mathematically better, unless I know I'm going into a year where I'm going to have a specific type of surgery, or I'm going to have a baby. Not I'm going to have a baby. Never had one. My wife has done all the baby having for us. And that sort of thing, then you can make that selection. But if you don't really know, I'd let the math inform the decision.
So I feel like what we just did there, I did the qualitative discussion. You did the quantitative.
That's kind of,
we tag teamed
that's the way it would go. Yep,
well
perfect.
done.